Are current blockchains decentralized?
That there's only one actual blockchain.
Trump has been vocal about supporting blockchain.
Does America want to be a bigger, better version of Switzerland? Or do you just want to be a bigger, badder version of Dubai?
Good you for views, me explain in simple terms. What is it?
Gajumaru is first time ever actual blockchain that actually works.
What's your end game?
We can give the world something that allows everybody to make a choice.
If you met Trump, what would you tell him?
Stop being friends with Jeff Bezos.
Welcome back to V Sport Perspectives. Today's guest is Greg Chu, a man who has spent decades working in investment markets and blockchain. He's been involved in digital currency since 2004, long before Bitcoin even existed. He's built fintech companies, investment platforms, and now he's building a blockchain that aims to do what others haven't: fix decentralization, scalability, and usability as actual money. Correct? So,
Yep,
I want to discuss blockchain, particularly what's wrong with existing ones, and surely understand yours. Sounds good?
sure.
Let's go. When we were preparing for this interview, I noticed that you got involved with blockchain before crypto was even a thing. What was it like back then, and what brought you into it?
So blockchain existed for an awful long time before the Bitcoin white paper. Um, and in a sense, decentralized computing really was part and parcel of that. So when I first embarked upon what I was doing, we were using three servers to do all of the confirmations so that you had some sense of there being um, more than one possible answer and you know, very unevolved. But distributed computing was something long before Satoshi Nakamoto wrote the Bitcoin white paper. What the white paper did was twofold. One, it really brought blockchain into the public consciousness. This idea that we can have an alternative economic system with electronic cash, and that's an important point. It's cash. It's not a promissory note. It's not a debt note. It's not a credit note. It's cash that we can transfer from one person to another. So the title of the paper, not that anybody in Bitcoin seems to have remembered this, is a peer-to-peer electronic cash system. Um, and actually, the one part was that it gave people this sudden apprehension that we could use blockchain to trust the message, not the messenger, securely at scale, which opened a whole gamut of new possibilities in people's minds that probably hadn't really taken root beforehand. Um, what I was really focused on at the time in the early 2000s wasn't just about having a digital currency. It was actually about creating a single market for all of the major financial exchanges to come through and aggregate into. And ultimately, the problem with it, even though we were using distributed computing, was that it was still highly centralized. And ultimately, I was asking people to trust an entity, howsoever that entity was composed. And you see this happening with blockchains or alleged blockchains right now. They create these foundations and so on. And ultimately, you're still put back into that position of trust. But that was the breakthrough idea of blockchain that captured people's imagination, was that all of a sudden we could trust the message, not the messenger, securely at scale. The really big breakthrough of Bitcoin was not that, though. That was a previous state. What the white paper really did was bring into mind this idea that we can create real money in the traditional sense that would have been argued by money traditionalists, Austrian economics, and actually JP Morgan very, very brilliantly when he explained the difference between fiat money, as it then was, which was a credit note, the greenback, versus dollars and pounds, which were backed by gold. And so the innovation of Bitcoin was to say, but hold on, there's almost no industrial value of gold prior to it becoming it was a medium of exchange, as a store of how we moved money around for a long, long time before it had any real industrial purpose. So its value was not derived from gold having an industrial value. It was derived from the value we placed upon it. And ultimately, what it was that you could prove that you had extracted value, you'd taken risk, you'd done work in order to extract a finite resource from the earth. But the innovation of Bitcoin was to say, well, why is that any different from fixing a cryptographic puzzle? And that was, for me, and I think a lot of other people who are believers in changing the system to make it more human, that was a real breakthrough, was this idea that, oh, hold on a second, we can actually do something from scratch that's fit for the digital era. So forgive me, I've probably gone a fair way off topic there.
That's fine. We're actually going to talk about a lot of different stuff. Just want to focus on your background now. And speaking of your first project, what was it like?
Um, it was nearly impossible because I was arguing in 2002. I was arguing for this change, this transformation, that we needed to move away from the existing banking system toward narrow banking, which means that instead of having banks being able to issue money upon the reserves, you can lend only the money that you have in deposit. And I was making an argument back then that all of the routes that we had gone down with broad-based banking were really destructive to long-term value, long-term human economics, and so on. I was arguing that the future of banking was not to be absent, but rather to change roles, to really understand what their USP was. And the USP, as far as I was concerned, was their knowledge and trust in the communities in which they operated. Um, Not the infrastructure that they operate, because that infrastructure really is a rent-seeking operation to a large extent, but actually it's also one that's become so archaic and so heavy that, as I point out to people, the only thing that's systemic about the banking system, as it's called, is risk. All of the systems, the technological processes that underpin that as we think of it, they're actually held together by the people in the back and middle office doing miracles on a daily basis. Um, so they deliver what they do despite the failing technology stacks that make up the so-called banking system. And that's why, I say the only thing that we have is risk. Um, but much as I remember standing in the boardroom of HSBC in London explaining how we could have digital money, how we could transfer assets around the room. We were buying and selling one another's car on 2G phones, demonstrating this. They thought it was wonderful. Um, but ultimately, they didn't really want to listen. And they're still not. Arguably, most of the big financial institutions are still not listening. Um, and I think the step change that people need to understand is to really focus. I mean, if you move away from a corporatist model that not only permits but rewards rent seeking toward a capitalist model, people need to really focus on what their USP is. And doing that is not easy when you've been in a specific position for a long time and you think that, no, we do all of these things. But actually, no, look, it's like Visa. We say that the Gajumaru facilitates faster transactions than any cash system in the world, and it's faster than Visa. This is a true statement of fact, because actually at 300 transactions per second, it is faster than Visa. Now, the catch is that when Visa starts to get a flow of transactions that overwhelm their system, they start to batch, which is where you need that trust element again. But what's Visa's real USP? It's not payments. It's fraud prevention. It's fraud detection. So, guys, stop trying to compete in a field in which you're going to get wiped out, and start competing where you have a true USP that is so big a knowledge and capability gap that that's what you can really monetize, because people will pay to have your services. I think when we talk about the whole Web 2, Web 3 transition, one of the things that people really need to get to grips with around this idea of, I mean, we talk about being able to restore the economic emancipation of humanity. What does that mean? It means that you own your data, you own your assets, you own your money, and they're yours. They're not lent to you. It's not on someone else's ledger. But in a world in which you own your data, and we're used to having things like Google Maps, Gmail, etc., and all allegedly for free. But what we're not understanding is the cost is our data, which actually in the Western world amounts to thousands of euros a year, thousands of dollars a year of value that we're giving away for Google Maps. So my point is we need to get used to the idea of paying for utility where we find it, which is the real transition we need to start thinking about. That if I want to use a service like Google Maps, maybe I pay 1,000th of a cent for directions to a specific place just down the road. And there are so many step changes that people need to make in terms of mentality to really get to where this is going to go. But ultimately, we're trying to strip away with blockchain a lot of the intermediation that we have taken for granted, but also a lot of the rent-seeking behaviors that we take for granted. For example, GDPR is upside down. The idea that somebody else gets to own your data and you get to restrict in some way how they can use that data, nobody does. I've said this to a room full of developers before. Put your hand up if you say no to all cookies every time you go to a website. Very few hands went up. Why? Well, it's inconvenient. Okay, but these are the costs of operating in a world in which you do own your own data, you do own your own money and your own assets. So giving people the tools is just a start. You then need to build a movement around this idea that we want to change from an economy that doesn't work for people to one that does. Right now, we're in a corporatist system. It rewards rent seeking. It makes the barriers to entry impossible for just about anybody. To move to a capitalist model, we need to start changing our mentality and, as I say, focusing on those USPs relentlessly. So that message I was giving to the banks in 2002, 3, 4, 5, 6, 7, 8, I just gave up, and I realized that the technology, what I had done could be rebuilt only in a distributed context. And so when I saw the Bitcoin white paper, it was 2009 when I came across that, I had the option to sell everything I'd built the first time, but then if I'd done that, I would have lost the ability to build something with it. I looked at the Bitcoin white paper. I came to the conclusion that it was pointing the way to where we would go, but it wasn't the answer. So I held on. I went out to sub-Saharan Africa building farming and mining cooperatives, again, because I believe the answer to every problem is equitable access to markets, equitable access to finance. In other words, capitalism. And ran into all the joys of what is now being exposed with US aid, because I remember we had the support of the entire Mozambican government for an artisanal mining project. But they didn't have the funding. So we went to USAID, UK Aid, Bill and Melinda Gates Foundation, and they kept telling us that what we were trying to do was far too commercial because we had an 8% profit margin. Because what they really want is people on their knees. They want to keep them there. And I think, what we're doing now with the Gajumaru is about trying to get people to get off their knees, to take responsibility for their lives, which is part and parcel of a capitalist system, is that you are responsible for what choices you make, and you reap the benefit and suffer the consequences of mistakes, errors, of substituting short-term gain for long-term benefit. But then I was in Houston and I saw Hedera emerge, and I contacted Lehman Baird and said, I'd love to license what you're doing. I don't like the way you're doing it. They were building this council type idea. But I like what you've got there, and could I license it? He said yes, but they were going through in various investment rounds at the time, and he put it off having a final decision until they got through all of that. They then got through all of that, and they spent 3 years dragging us down the road. So my view in 2017 was that somebody out there who had billions of dollars to do this with was going to solve how we make a functional blockchain that is actually a blockchain properly. An actual blockchain that actually works. And actually nobody did. Everybody kept chasing, we do a long series video, long form video about this called the Garden of Eden problem. Again and again and again, people who were looking to build something, possibly starting with really meaningful intent, ended up diverting from that goal by creating something that gave them a rent-seeking control mechanism within the system. And ultimately, we ended up with no actual blockchain that actually worked. So the next step was to think, well, how could we stitch pieces together? Because actually, where we focused our time, well, my team then focused the time, was how do we bring assets on chain completely? Because don't forget, tokens point at assets, they're not actually assets. So the asset is still held by a custodian. And if it's still held by a custodian, you're still rooted in the old system of trust the messenger, not the message. So coming to Switzerland, FINMA actually dug into what we were looking at properly. And for the very first time, we were talking to a regulator who understood the technological innovation we'd done that allowed assets to come on chain completely. But we still had the problem that there wasn't actually a real blockchain out there that we could build this on. I mean, Ethereum gives you smart contract language. So let's look at this practically. Bitcoin is a proof of concept for an actual blockchain and a mint. An actual blockchain, it definitely is. But it doesn't really work because it's so inefficient, so slow, that you cannot see it really being used in everyday use. It mints money, yes. Real money, yes. That was its great innovation, as I've pointed out. But even with that, it's so inefficient, it's just not going to work as money. It works brilliantly as a proof of concept. Then you look at the other side of it, that it doesn't have state machines, which are smart contracts. It doesn't have a smart contract language. These things are not native to Bitcoin, and it's not possible to integrate these in now after it's launched and gone. It's in the public domain. You know, the incremental change to Bitcoin has been absolutely minimal from the point of launch. And then you had Ethereum, which was a proof of concept for state machines on chain, smart contracts and virtual machines on a blockchain. But that's all it is. Solidity is an extremely dangerous programmatic language. So, yes, it showed how this could happen, but it took away real money. It moved to anonymous proof of stake, which is not something you can ever trust. And it simply doesn't work with the efficacy that you need. So, that reality was you can have all kinds of amazing ideas of what we can build on a blockchain, but you need a blockchain to begin with. And the opportunity came up in 2023 to come together with a team who could actually build a real blockchain that really worked. And that's where we are now. The chain is underway. We have a lot of development still to do, but in between where we are now and it being open to public access for mining, it's going to be open. The first stage will be to open it up for public use, and then move to public mining. The stepping stone is that you need to be able to push all of the updates that you intend into the core system before you go public. Because once you go public, the ability to change anything in the core programming becomes the same as Bitcoin's, i.e. nil.
All right. So yeah, we'll still have a lot to talk about Gajumaru and the blockchain itself. Still, just a personal question. You still live and work in Switzerland, yeah?
I moved to Switzerland in 2022, thanks to the former CTO and one of the seed investors conspiring to bring the company down and steal all of the IP. I had to send my family back to Ireland, and I stayed in Switzerland because there was no opportunity to rebuild from Ireland. So I live and work in Switzerland, and unfortunately, my family live and work in Ireland. I'm currently visiting my family before going to DC for the CPAC Conservative Political Action Committee in DC next week.
All right. And Ethereum was actually born in Switzerland as well. And is it still the top destination for doing business in Web3 space?
Um, that's a mixed bag. So if you want to do business in a grown-up way with grown-up regulators and do something real, I would argue absolutely. Nobody touches FINMA for having done things the right way for the right reasons. Maybe Liechtenstein, that's it. Everybody else has a long way to go in terms of properly thinking through what it means to have operations within a blockchain context, and really understanding what is it that we regulate. We regulate trust. We regulate that we put in place oversight and auditing where we are putting people in a position of considerable trust. This is fundamental. So the Swiss regulator FINMA is extraordinarily professional and grown up compared to every other regulator I've ever dealt with. So if you want to do things properly, yes, Switzerland is the place to be. But Web3 is largely made up of people who are not doing anything properly. And for that purpose, they want to go to Dubai, because Dubai is a little bit like a fun kingdom of entertainment and magical thinking, with the ability to create things like meme coins that are nothing more than a way to, I mean, I get some of the frustration that meme coins embody. I understand their purpose in terms of ordering communities and those things. But what I don't see is where you start talking, people are starting to talk about how the Trump coin changed everything. And now all of a sudden, people can raise money using meme coins again. But think that through. What are they actually doing? They're taking money from people on the basis of a gamble in order to, and so if I sell you shares in my company, I'm selling you shares in something that you can establish whether or not there's an economic story there, there's a business case, etc. And you're taking some of the risk by putting your money into it, but you're also participating in the upside. With a meme coin, I get to sell you all of the risk, I get your money, and I have no accountability or responsibility for what happens next. So, that's where they all start to ring up the Lambo dealership, and Dubai is wonderful for this. And my big caution, and why I'm going to CPAC next week, is I'm really worried that some of the talking heads around the Trump administration, the likes of Anderson from Coinbase, Binance, all these guys, they all want the shortcut destruction of blockchain. I describe crypto as being the cancerous bastard love child of cryptocurrency and blockchain, because all it's really done is, on the one hand, I think it started from anger. It started from the impotence of where things were. But it's morphed into something that's been about abusing knowledge differential, great slick marketing, and the lack of hope that people have. Because think about this very carefully. We have redefined many terms in the last 20, 30 years. Vaccines are no longer the disease that you receive. So, for example, the original vaccine, smallpox, etc., they were all about having an exposure to a very weakened state version of that disease that your body then learned to fight safely, so that when you got a real dose, you already had the defenses in place. Vaccines in COVID transformed into something that was actually an RNA change. It was a change to your actual DNA. And that's probably the NSA wanting to block what I just said by having that network slow down. But jokes aside, we've done the same thing with inflation. Inflation, very simply, in the past was about the inflation of monetary supply. And consumer price index and producer price index were indicators of how that was transmitting into the wider economy. So, as I keep telling people, humanity, we are the transmission fluid that is slowing the transition of monetary supply into PPI, producer price index, and CPI, consumer price index. And this is a falsehood. So what's really happening is people are getting poorer and poorer and poorer. And those without real assets to begin with, your generation, my children's generation behind you, they have had their futures stripped away from them. So if you want to know why your generation and my children's generation have got drug problems going through the roof, unemployment, lack of care, lack of motivation, well, you just stripped all their hope away. And then you've got these crypto creeps coming along saying, hey, buy my meme coin. You might just get lucky. We may not do the dump before you get out. And they're abusing this loss of hope and, taking $100, $500, maybe $1,000. And this for me is how you destroy blockchain adoption. Because when you talk to people and they say, oh, but hold on, blockchain, isn't that about crypto? No, but it is about crypto. So, no, blockchain has been abused in order to deliver that abuse. That doesn't mean that blockchain itself is the culprit.
And speaking a bit more of blockchain, you already said that back in the past it was centralized more, right? What about now? Are current blockchains decentralized?
So I would argue, we would argue, that there's only one actual blockchain, and it's called Bitcoin. But for the reasons given previously, it doesn't actually work. Everything else is a fake blockchain because it has some sort of control vector or some sort of control process within it. So Dfinity, for example, something like 80% of the stake is controlled by the Dfinity Foundation. Do you call that centralized or decentralized?
Well,
Solana, most of their transactions are not actually transactions at all. So their alleged throughputs are, well, when it actually has uptime, their alleged throughputs are completely fallacious. But the ones that they like to tout to the world are delivered by them having over 75% of the voting stake. This is not decentralization. This is illusory. And it's intended to create this illusion of decentralization because you know what? Decentralization done well is actually hard. It's not easy. So I think part of it is that there's this idea that there is one answer, this constant refrain, the one ring to rule them all type approach. And there really isn't. So what we've ended up with is a whole slew, just like the existing economy. The existing economy, and has been for the last 5,000 years, ever since we started to settle land and require other people to intermediate and provide us with protection, it has all been about a centralization of power into those vestiges, whether that was the Roman Empire or the church, or in the years that followed the banking system from the Medici era on. Um, why did the Pope kill off the Knights Templar? Because they were becoming more powerful than the church in terms of moving money around and having a controlling influence on trade. But we've had these centralizations all the way through this period. And this is why I describe the opportunity we have with blockchain to change this as being a multi-millennial opportunity to completely transform how we operate and restore our economic sovereignty as people, as individuals who exist within communities. Um, Forgive me, I've diverted from your question. Would you mind re-asking the question?
yeah. Actually, you've pretty much answered it because blockchains, as you said, they are quite centralized, quite centralized.
No, not quite. They're highly centralized.
Yeah, they are.
There's another aspect to look at is anything that's proof of stake. It works only if you know who all the actors are and what stake they have, because otherwise you don't know who's voting for what and on what basis. In anonymous proof of stake, it's analogous to somebody, and I love doing this at conferences when people start talking about, oh, Ethereum proof of stake, it's wonderful. And I say, okay, great. So um, how many of you would be willing to work for a company where you don't know who any of the managers are, never mind the C team or the directors? Oh, look, not one of you wants to work in such an institution. So why are you willing to trust all of your digital assets to a system in which you don't know who any of the controlling actors are, nor to what degree they are colluding? The
And
assumption they're not is completely fallacious.
yeah, and then another question to you. What do you think of chain analysis and ciphertrace and their purpose?
Don't really know a lot about them, so there's no point me answering that question. I believe they are looking at how people are utilizing chains, to what extent they have throughputs. It would be useful if those things were honest because they'd expose things like there's almost no transactional flow through Ethereum. There's very, very little going on in Bitcoin. Um, a lot of what we're seeing going on is just wash trading. There's some inter so-called exchange settlement, but not real. So I don't know enough about what they do specifically to comment, but I would like to see people starting to tell the truth an awful lot more in this industry. It would be great if they did.
All right. Well, still, as you've already mentioned, more firms get dedicated to de-anonymizing transaction, and they help governments track wallets, right? And firms like Repo or Binance actively work with regulators. So the question
No,
is,
I'm not sure that you could say that Ripple actively work with regulators,
yeah.
nor Binance. So Ripple deceive regulators as best they can until they get exposed for what they're trying to say and do. Binance, so far, have managed not to be regulated because regulators have been smart enough to understand that they have absolutely no place being regulated.
Mm.
Um, you know, the reality is, come back to why I said, why do we have regulation? We have regulation because we put people in a position of centralized control. That requires us to have trust. In order to have trust, we should have the ability to have oversight and review audited statements of what's going on. Show me a stablecoin that has proper auditing. There isn't one. Show me what FINMA, people in Switzerland cried out because FINMA said, oh, you know what, in order to issue a stablecoin, you should be a commercial bank because commercial banks have the power to issue money. That's a completely consistent position. And everybody's crying that you're crushing innovation. No, stablecoins are not innovation. I mean, they're no different from a bank issuing cash in the traditional sense. It's still a ledger. It's still something you have to trust. It's still supposedly based upon deposits somewhere. So why shouldn't it be properly audited and properly regulated? Oversight. So these companies, they're deceiving people. They're deceiving people with very large amounts of money to drive narratives and pay for it. I was talking to one of the marketing people for us the other day, and they said, they were saying that all these talking heads who are trying to push the Ripple agenda with the new administrations, oh, they know it's just people talking. And I said, no, you're missing the point. They're being paid to say these things. They're being paid to drive these agendas. If you want to look at the history of Ripple's operations around trying to position themselves in various lights, it's serious money has gone into that narrative, that positioning. So from my perspective, I look at all of these guys and I say, A, there is some real value in what they have in some cases. I mean, for example, there is a really good USP that Ripple has, but trying to pump their coin agenda is not it. If you look at Polygon, or I think they call themselves Web3 Foundation now, Cosmos, all of these people, they're not really trying to build a resource layer. They're trying to create a mechanism for driving the price of their token up. Because in order to do something in a specific industry and have one of their child chains or parachains or whatever they want to call them, you have to bid a certain amount of their token to get that parachain or sidechain or whatever they want to call it. And ultimately, that sidechain, parachain, whatever, it doesn't have any real capacity of its own. It's a layer two to the core infrastructure piece. Again, driving control and all about number go up. It's not about delivering something that is actually transformational. And unfortunately, $95 billion of venture money has gone into maintaining this illusion that two proofs of concept, Bitcoin and Ethereum, are anything more. They are respectively square wheel axle 1 and square wheel axle 2. You're never going to turn them into round wheels unless you take the square wheels off and put round wheels on. Then all of a sudden, you're going to have a functioning vehicle, but we don't right now. And all of that money has poured into maintaining an illusion rather than delivering something that really unlocks the capacity of blockchain to be at the cornerstone of how we achieve a better, fairer economy.
Mm. But still, there were some scandals with FTX, Terra OneCoin. Do you think that trust in blockchain is collapsing, or is it just part of the evolution?
Who trusts?
Is trust?
Who actually believes it? Because you know what, this industry has been talking about the other 99%
Mm.
for as long as I can remember.
Well, the average.
Where are they going to get? Yeah, so the normal person who isn't just saying, yeah, I'll gamble $500 because maybe it might turn into 5,000 if I get lucky, because there's no substance to any of this stuff. It's just if you get lucky. It's like, that's why I used to refer to, I say that Bitcoin stopped being Bitcoin about 2014 and it began to transition to becoming Betcoin, the lord and master of number go up. Heavily manipulated. The meme coins, same thing. They're selling the idea that if you get in early enough, you might make some outsized lucky profit, but you may as well just go down to the racing track and bet on a horse. Any horse will do. At least it'll be a bit more entertaining than the heart-stopping reality of waking up in the morning and seeing that the $5,000 you had yesterday is now 5 cents, because the dump has happened before you managed to get out. Um, Everything that happened with FTX, all these guys, was completely predictable to anybody who knows anything about financial markets. When FTX collapsed, I actually didn't dance on its grave because I recognized that an awful lot of people who had a knowledge imbalance that FTX and their ilk had abused had been hurt. But the reality is that is what this entire thing is. Look, how much actual value underpins Tether? We don't know. And yet it's the cornerstone of stable money, supposedly, or it's the cornerstone stable coin of the whole farce of the Ethereum ecosystem. But should you really trust it? I mean, it's one thing that it's pegged to a dollar, which has been printed out of all sight. We've 16 times more dollars in circulation now than there were when I started as a trader in 2001. In 24 years, we've got 16 times more money in circulation.
Hmm.
So that is going to find its way into things. But so your stable coin is, you are pegged to something that is actually constantly increasing in supply, therefore reducing in value. And you have to trust that the peg is real, really. If there were really a rush of redemptions, could they actually exit? What assets is that value pegged to? Because if it's pegged to a whole slew of commercial property in China, as the rumor goes, that's a grenade that's waiting to go off. And yet nobody is learning. Why are they not learning? Because we're not really getting outside of the crypto bro bubble. We're not getting outside of the crypto bro bubble because far too much of what's going on has been about trying to strip money out of people and not actually doing something sensible or real. So these things are going to keep happening until, as an industry, we behave better. Unfortunately, all of the money has been pouring into behaving badly, and bad behavior has been rewarded over and over and over again. This has to change. This is a multi-millennial opportunity to change the track that we're on. Right now, we have reduced the vast majority of people to being slaves. We may not like the term, but it is true. We have reduced people to a state of total dependency, whether that's upon the totalitarian socialist state or the whim of a corporatist system that slews all of the playing fields in one direction. If we are to get back to a state where we have a human economy in which we can all participate, in which we can have actual hope, we need to restore the meaning of money. We need to restore the ownership of data. We need to restore the ownership of assets. We've taken these things away and we've replaced them with regulated operations in the traditional economy, which is one thing. It's a lesser evil. But what we're seeing with all of these scandals is the playing out of why we have regulated operations in the traditional economy, why we need them. Because we need to have oversight, we need to have auditing in order to have trust that's not just a pinky promise and, dude, I'm cool, I'm a crypto bro, you can trust me. I only got 2 Lambos out of the last pump and dump I did.
Well, let me ask you about another issue, because governments are cracking down on crypto privacy tools. And Tornado Cash was sanctioned. Monero is being delisted by major exchanges due to regulation. Will privacy-focused blockchain projects survive, or will they be regulated into extinction?
So this is a really complex topic because actually, I mean, I had a go at Christine Lagarde from an FT article the other day on LinkedIn because she again drove out the trope that blockchain facilitates money laundering, whilst ignoring very conveniently the trillions of dollars of money laundering facilitated by the traditional banking system. Um, the reality is blockchain doesn't do that at all. If you do a transaction on Bitcoin, the entire history of every single Satoshi can be tracked and traced. It's in the public domain. So this is one of the things that we saw as a key innovation of what we've done. And I touched upon it earlier, that people keep trying to think that there's one blockchain solution to solve everything. And it fails to understand that actually everything around us is a trust market with differing needs and differing wants. If you look at your household, is that a democracy or is that a dictatorship? If you tell your children to do something, do you expect it to be a vote? Absolutely not. It's a dictatorship. And if they don't like it, well, then you punish them until they do, right? Um, if we start looking at how do we operate within a community, there are trusted actors that we look at in the community that we know, and we say, oh, well, if John down the road, who's a specialist in water systems, says that this is a good idea, I'm probably going to go with what John says. All of these things are, and that's an example of delegated stake, for example. Okay. All of these different things all require slightly different solutions as to how we mix up that blend that gives us the right degree of trust, scalability, and no one blockchain solves that for everything. So our approach was actually to say the opposite. It was to say, okay, well, what's missing? Everything is fractured. The entire traditional economy is fractured and fragmented, and the people who control access to and from those fragmented, fractured pieces actually get to rent seek, in other words, charge outsized profits relative to what they do. And when they get greedy, which they keep doing, they get to socialize all of their risk. That was the other leg of what infuriated me about that article in the Financial Times was it then went on to talk about, well, if banks start adopting cryptographic assets and they fall to nothing in value, we're going to have a bailout. How about no? How about if you do stupid things, you should suffer the consequences of doing stupid things and not everybody else? So when you look at this issue of privacy, our approach was to say, okay, so there should be an open resource layer that nobody owns, nobody controls, that is completely free to the world to use. But that's just a backbone. It isn't the core. It's a core piece, but it isn't where we expect people to really do most of their transactions. So we don't talk about layer 0, layer 1, layer 2. That's a nonsense. Layer 2 is re-centralization in order to expedite broken proof of concepts, Bitcoin and Ethereum, and pretend that they work, right? That's why all the money to fund those things came from Bitcoin and Ethereum whales. The marketing for that then created the illusion of a layer 1, which was the so-called blockchains, the fake blockchains in actual fact, because they were proof of stake. And then what emerged next was layer 0, an actual company called layer 0, who said, hey, there's this great opportunity to connect all of this broken, fragmented infrastructure, just like the existing economic system, and turn it into something that profiteers for us. Again, rent seeking, control, etc. We reject that notion completely and talk about RIPA, resource, infrastructure, platform, application. User is the one who then engages with that application. The application sits on a platform layer that enables things like that to happen, which in turn operates within an infrastructure. So let's give you an example of how you would see RIPA operating. Resource, Groot, in the Gajumaru, allows anything and everybody to occur within what we would call a negotiable space. Rooted in that is the infrastructure. So let's say, for example, you had a payment system. Let's say the Swiss National Bank wants to set up a Swiss national payment system on chain. It wants to set up a data system for medical records on chain or off chain. This could just be a database. But the point is, all of that infrastructure sits as an interconnected part of the whole. And that's the real transition that we saw, is that there is no one answer for everything. You can give an answer for how we can have a negotiable space, which means no governance, no control. There's nobody, they talk about in regulation that who do we put our hands on the throat of if we find that you've done something bad? And the answer is X, Y, or Z, whoever's controlling the system. But with the Gajumaru, very deliberately, there is no governance, there is no foundation, there is no controller, there's no trick being pulled. So actually, we can't stop anybody doing anything on the resource layer, Groot. But that's not where people are going to do most things. Most things are going to happen at the infrastructure layer. They're going to happen with different sets of rules and regulations applied, different trust models being applied, and every single possible permutation of trust model is going to require a slightly different permutation of solution. We just give people the tools to do that, and that's the key. So when it comes to privacy, nothing on Groot is private. It's the same as Bitcoin, right? But at the infrastructure layer, can you have privacy? Absolutely, you can. You can have it so that the way that the infrastructure is structured inside Groot is such that there is no transparency from the outside to in. You have to be in to see what's going on. Ultimately, I'm not making a value judgment either way. We're not as a team. We're saying you can build whatever you want. Now, if the regulators come along and say what you've built is bad news, that's your problem, not ours. We just gave you the tools to build something. And that includes all the good things that we think are going to happen too, because we have to get away from this idea that anybody can be trusted to be always good. As I pointed out when I was on the stage at Liechtenstein talking about decentralization, I said, no matter how good a person you may or may not think I am, you can never allow me or any of my team to have the keys to the kingdom. It's just not what we have to get rid of this idea. We have to get rid of this deification of founders and instead say, okay, let's be practical. Taking governance away from the core allows anybody and everybody to do whatever they want. But it is on a blockchain, therefore it is transparent, unlike the existing banking system, which is not transparent and facilitates trillions of dollars of money laundering. The private chains like Monero, they can obscure things. Tornado Cash can obscure things. Is that something that we want? Very possibly within different types of trust market. Yes, it is. Should it be something that is arrived at through all kinds of different experiments? Sure. I think ultimately the test is going to come as we emerge into this. How far do we want to go with these things? Because ultimately, does anybody need to know that I bought milk from a shop down the road an hour ago outside of me? No. Is there some cause where people would want to know what's happening, where money is being siphoned from one illegal activity into another? Sure. But before we sell our freedoms down the river, shouldn't we be very careful that we are doing that in limited circumstances? As I say, these are conversations for society at large to happen. I'm not giving an answer. I'm just giving a tool set that can allow all of the different answers to be explored.
Let me ask you another, the last general question on blockchain. Trump has been vocal about supporting blockchain. Do you think his involvement will help or hurt the industry?
I'm okay. I think that America regaining leadership of Western values, Western civilization's values are built upon the idea of free trade, capitalism, free speech, free conscience, all the things that the totalitarian corporatist socialist state has been trying to stamp out since the Second World War. So I absolutely celebrate that the Trump administration has come in and it's starting to peel away we spoke a second ago about transparency in the context of blockchain transactions. Well, how about we start talking about supervision and oversight when it comes to government spending? Because that's all that Doge is doing. It's saying, okay, so what are you spending money on? Why do we need a state that's this big and this expensive? And I use state specifically because that is the Mussolini-esque term, the fascist term, because that's what this has become. This has become a set of tools of control that do not wish to have any oversight whatsoever, much less to democratic accountability. But that is the cornerstone of how the democratic settlement was done between elected and electors within Western civilization that led to 400-500 years of massive innovation, growth, development. We need to get back to that. I think America returning to the leadership of that is to be celebrated. Coming to the specific question you ask, my big fear is who's around him. So when I see the Coinbase, Binance, Ripple crowd talking about how they need to see blockchain adoption, it runs cold through my veins because this is not blockchain. This is centralized systems with no oversight, masquerading as a blockchain by using other people's lack of knowledge of quite a dense and difficult technical subject to create this pretense that, oh no, we're decentralized. I mean, we're totally centralized in the background, don't get me wrong, but we're really good at pretending we're decentralized. So Coinbase, have a look at them. What are they regulated as? Are they regulated as an exchange? No. An exchange is a multilateral trading facility. It's big boy territory from a regulatory perspective. They're not even a custodial bank, and yet they are custodian for billions of dollars worth of assets, which are not segregated from their balance sheet. These are mistakes that we ironed out of the financial system 300 and 400 years ago, and yet we're still making them here in blockchain. So the big fear I have, and why I'm going to CPAC next week, hoping to connect with people who are actually involved in this administration, is to get them to see what the real game that is being played is around them. As I point out, does America want to be a bigger, better version of Switzerland? Grown-up regulators, grown-up regulation, real thought going into how things are being done? Or do you just want to be a bigger, badder version of Dubai? Now, there's a big push from the so-called crypto bros who are funding a lot of noise to get a bigger, badder version of Dubai. That is a serious point of fear for me. America leads, the rest of the world follows. And a failure of American leadership, listening to narrow corporatist, centralized so-called blockchain, fake systems, fake exchange, all of these guys, that's extraordinarily dangerous.
Let's focus on crypto a bit, yeah, cryptocurrencies. You've already talked
Which
about,
one? They're two different things.
yeah, that would be the cryptocurrencies. I mean, that is the global topic, yeah, the general one. You already referred to Larry Fink, the CEO of BlackRock today, as saying it is index of money laundering. But then in 2023, he said that they filed for a Bitcoin ETF actually, and then 6 months ago he called it a legitimate financial instrument. So there is a obvious
Well,
signal of a shift.
uh,
Yeah. What do you think
actually,
happened?
I didn't speak about Larry Fink. I spoke about Christine Lagarde, who remains of the opinion that the existing banking system is beyond reproach and that blockchain is the vector of all fraud and misbehavior, despite the fact that blockchain is transparent. And she's obviously just wildly ill-informed and intentionally remains that way. Larry Fink is a different story. So, like many, including Jamie Dimon from JP Morgan, they all were trashing Bitcoin whilst busy buying it. This is the narrative that has gone on and on throughout this whole story. Um, and then as they began to accumulate more and more of it, they saw the mechanics for getting mass participation. We actually did a video, Craig and I, about ETFs and the Ethereum ETF, and the same thing applies to the the Bitcoin ETF. It was a means of industrializing the process of creating large numbers of bag holders. So when crypto VCs ask you, what size is your community? They are not asking you, how many customers do you have? Who's using your service? How much are they spending? Which is the traditional questions you'd think that a venture capital company would actually ask. No, they're asking, how many idiots have you assembled in your community that we can dump on? And when we stick 50 million onto your balance sheet to pay for marketing, because it's not going to go toward innovation of any kind whatsoever, how many more can we build upon in order to dump this token 6 months down the road? This is the cancer of crypto that has been playing out again and again and again. It's why, look, people tell me that I'm being arrogant saying that there's no actual blockchain that actually works, minting real money that really works. I can prove every one of those points, but I don't really need to if I can just point to this one thing. If you built an actual blockchain that actually worked, minting real money that really works, what's the very first platform that you would build? The answer is a marketplace. But nobody built an on-chain marketplace before us. We built the very first one. We called it quid pro quo. We're changing it to Gajumaru because we realized that we're biting off more than we can chew in terms of trying to get people to recognize the brands. But that's a real marketplace that really works. The demo that we put up on YouTube is of a lady in El Salvador selling goat soap for 22.95 cashews, $22.95 Swiss francs, and selling it to a guy in Australia and paying 10 cashews to transport it there. All of those transactions are occurring on chain. They're occurring using wallets that don't have logins and passwords and we actually built a wallet from scratch that doesn't have any existing dependencies and therefore unaudited dependencies, and therefore doesn't come pre-hacked like every other one in the marketplace. Um, that's the first thing you'd do if you had an actual blockchain that actually worked, minting real money that really works. Um, so when I look at what has been going on in this space, all of that money has gone into marketing. It has gone into narratives. It has not gone into innovation. If it did, we would have had an actual blockchain that actually works, minting real money that really works 10 years ago, maybe 15 years ago. That wasn't where the money flowed. As I point out to people, raising capital for what we've been doing is extraordinarily hard because you talk to an investor and they say, okay, so what bit where's your corner shop? Where's your monopoly? And the answer is, oh, we don't have one. Oh, but you must have one. No, 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 no. We don't have one at all. Okay. You're selling mining pool software and you're going to try and get 10 million people in to mine in pools so that you can have massive decentralization before you go to public launch. Surely you can keep charging them money afterwards. Nope. But why not? Well, because you see, we're capitalists and we believe in competition and we think that the chain is made stronger, which benefits everybody through more competition, not less. So because we believe these things, we're going to stick to our guns. And right there, you end up being told, well, I can't invest in this because you don't have any lever of control over the system. Turning around saying, well, actually, we have real expertise. Open source is free, expertise is not. We think we can make good money out of providing that expertise to third parties without needing to control things because we have the bravery to back ourselves to say that we can do this.
Hmm.
All the stuff that we've seen, look all over the crypto market, look all over the Web3 market. How much real utility do you see? How much real purpose, how many real business cases, real problems are being solved? And the answer is very, very, very few. I remember going to a presentation of an insurance company talking about their Web3 environment. And what it amounted to was some goggles so that you could go into a Web3 cool environment and meet an insurance salesperson in a virtual environment and do a transaction that wasn't even using the blockchain. It was this kind of stuff is not real. It's just illusion. It's not innovation. It's a pretense, and it's one that we need to move away from. The excuse that the technology didn't exist to do something real, we have taken away. The Gajumaru removes that excuse completely. We now have the potential to build anything we want. It's going to be open so people can do whatever they want. They don't need to come and ask us for approval. I had a conversation with someone the other day who said to me, okay, so when are you going to build on and off ramps onto the Gajumaru? And I said, well, that's the wrong question. I should be asking you. You're the guy who's come from banking. When are you going to build on and off ramps from US dollar into Gajus? We don't control this. I mean, this is the thing that you nearly have to you bang your head against a wall because you're like, people are so used to there being a control function to these so-called blockchains, these fake blockchains as we call them, that they're used to having to get permission to do something. It's open. You can do whatever you want. If you want to sell naked pictures of yourself, good luck. Go for it. If you want to do something serious, you want to build a proper marketplace for insurance products, for example, great, go ahead. Anything and everything that could ever be done in the traditional economy can be done better in a blockchain context. Now we have an actual blockchain that actually works.
All right. So actually, I'd like to talk a bit more about Gajumaru, but let me ask you the last question about the general point we were discussing. What is your biggest grievance with Bitcoin and Ethereum?
Okay, so I have no grievance with Bitcoin, zero. I think Bitcoin was, as I've said, it awakened consciousness about what blockchain could do, about moving away from trusting the messenger to trusting the message itself. That's what a distributed ledger does. Um, the the real innovation of it, that we can create real money not by mining gold out of the ground, but by mining a cryptographic puzzle set. That was the really smart part of it. And there's nothing that I have against Bitcoin. I think it was a white paper of, as I've said again and again, multi-millennial significance. The thing I have an issue with is how what was the most incredible proof of concept for non-debasable, non-censorable, or censorship-resistant money got turned into a circus. It got turned into a number go up game. It was manipulated right the way back from the early teens, and so it's continued. Um, you start to see the narratives coming out. You know, when Bitcoin was trading in the teens, what a year and a half ago, all the narrative was about how Bitcoin just could not get up in value and how it really was so bad and nobody should touch it. And of course, the whales are busy buying all the leveraged positions that then collapse, and people go, "Oh, it's not going to go up. It's not going to go up. I give up. I stop. I'm handing in my betting slip." And of course, the whales are sitting there buying all these betting slips up. It then accelerates up in price. It gets to a certain point where the whales have really cashed out, and the narrative starts going down the other side. Oh, this is terrible. That's my problem with this. I think Bitcoin is marvelous. My problem with it is that it has been manipulated by hidden actors to become something whose object is to make a very small number of people into what I call Shanghai, or my team and I call Shanghai billionaires. So that's where you live in, you're a billionaire, you live in this incredible palace, but you live in a society in which you can be arrested any day by anybody in the state. You are surrounded by poverty. You must protect yourself and have high walls. This is not a high trust society. You are trying to create a low trust society that allows you to feel richer while everyone else is made the poorer. That is not capitalism. That is straight up corporatism, making a very small number of people much richer whilst at the cost of everybody else, not expanding the economy, not making it better, unlocking our human creativity, the human economy would add hundreds of trillions to our economy over the next century. Unlocking our ability to trade and invest in one another would unlock trillions of dollars of economic productivity. That's not what those guys are about. And when you hear them pushing the narrative of Bitcoin ETFs, what are they doing? They're trying to scale the industrialization of bag holding. When you look at what they're doing now with trying to push for reserves in Bitcoin, that's the stupidest thing going. So the argument that they make is that Bitcoin is a store of value against inflation. Okay, guys, so what do you want to have happen again? Oh, that's right. You want the Fed to print how many trillions of dollars now in order to buy Bitcoin, to make Bitcoin the reserve currency that underpins the dollar, just like gold used to. Do you hear any of what you're saying? Because the inconsistency of what you're saying, it should be blinding to everybody. How you're not being laughed out of the room by any serious person, I have no idea, other than the fact that they have a lot of talking heads and a lot of marketing pushing these narratives, because their aim is to end up being unbelievably rich, and like many of them, converting their fake token value, fake money value, into real assets, land in Zug, Switzerland, Zurich, big tracts of ranches all over the States. What's happening in that context is a cancer that is completely contrary to everything that Satoshi's white paper was about. That's why I'm against it. When it comes to Ethereum, Ethereum was a proof of concept for state machines on chain. The smart contract language of Solidity is so immature and so incapable of maturing that it can only be classified as a dangerous programmatic language. Did it point the way to something? Yes. But it's not an end. It was so inefficient in how it operated. It's a proof of stake. Move to proof of stake means that there's no real basis for its value. It's just like fiat money. except it's worse. And what real innovation has happened on the Ethereum, anywhere in the Ethereum ecosystem? I mean, staking. What's staking? How, people talk about decentralized finance. I'll tell you what decentralized finance should be. It should be what I was trying to do in Africa in the early 2000s, or early teens, rather. We were trying to ship containers of fruit around the world into Europe. And we were competing with all the former slave plantations to do so with communities of farms. Why couldn't we get finance? Because of the lack of financial services available within the countries that we were trying to export from. But actually, our risk was in Rotterdam. Our risk was in the people that we were supplying to. If you went to the world and said, we're going to lift 300,000 people out of poverty, we're going to give 100,000 children the hope to do something other than be subsistence farmers for the rest of their life, to give their educational output purpose, we're going to give these people 6 times more money for the same work that they do. We just need you to accept a 9% yield on a debt instrument that's completely secured for the delivery of this fruit from the farm to the point of sale. That's the reality. So my objection to Ethereum is that it is a square wheel that was never going to be anything other than a square wheel, that has worked very hard to invest in and obscure any attempt to do real innovation upon what it pointed the way to, which is to have a proper smart contract language on-chain that facilitates an on-chain economy. To be fair, we ported Sophia and Fate, the virtual machine, Sophia being the language, from Eternity. Yanni Maroslav, who was known as the godfather of Ethereum, he was the one who saw this back in 2018, that actually Solidity was not good enough. And what was needed was a smart contract language built by real global experts. And he raised about $200 million. I'm not sure where most of the money went, but about 40 to 50 million was spent building a really mature, grown-up smart contract language, Sophia, and making that operate within proper enterprise-grade virtual machines, Fate.
All right, at this point, let's switch back to Gajumaru, if you don't mind. So, talked a lot, yeah, said a lot, but could you, for views, me explain in simple terms, what is it?
Gajumaru is a first time ever actual blockchain that actually works, minting real money that really works. What does that mean? It means that we've created a resource layer that's open to all, controlled by none. That's what we call Groot. It's the core base of the whole thing. Groot is essentially Bitcoin made tens of thousands of times more efficient with the addition of native smart contracts and native virtual machines, which you've adopted from Eternity. That means it is a real solution set for the very first time. Now, on top of that, it enables a creation of a whole forest of infrastructure above it for all the different national purposes. So, for example, if somebody wanted to have a national database or a national payment rail, all of those things can be built as infrastructure above. And so you end up with a near infinitesimal amount of capacity and throughput when you look at the thing as a whole. The reason it's called the Gajumaru is that the Gajumaru is a tree that grows in Japan in such a way that rather than growing outwards with new rings, it grows new bulls. So fully mature, a Gajumaru actually looks like a forest, but it is one organism with one root. And that one root is what we call Groot. The euphemism then becomes that each of the trunks that you see with all of the leaves, the branches, everything else, that's the infrastructure. And that is a total change from everything else we've seen, because anytime you've seen something in the past that has tried to create an ecosystem, like, for example, Cosmos has effectively layer twos. Those layer twos have to get their consensus from the prime chain. And that's not what happens within this. So all of the associate chains, the infrastructure layers, they are called associate chains. They can provide their own consensus. They can do their own thing. One of the conversations we've been having with some of the more advanced layer ones, as they're known, is to say to them, look, you've actually got some really good USPs here. Hedera, for example, has an excellent algorithm for doing consensus within a proof of stake context. So our conversation with them is to say, well, actually, you should just make that as a tool that's available for somebody to build infrastructure. Get paid for people using your tech instead of trying to create this bubble that everybody must be within, or everybody loses. That's ridiculous. Take the USP you have, an excellent consensus engine for a proof of stake model. Make it available to people as a licensed product on Groot, on the Gajumaru. Allow people to build all this different type of infrastructure. And what you end up with is a completely interconnected economy that everything works within, everything can communicate with everything else in, and there's no rent seeking capacity within the middle because nobody controls that core. Therefore, nobody can be the rent seeker. You have made the value of connecting all of the pieces virtually nil. So who can be a rent seeker now?
Mm. And as a regular person, how would I interact with your platform? How different would it be with all the others?
It's not so different. I mean, we built a wallet with no dependencies. So you would download the wallet, you would set it up. We have a thing called grids. We've got rid of logins and passwords. That's all shown on the demo that you'll find on the YouTube channel. Um, the demo clearly shows how instead of operating with logins and passwords, we're using the secure enclave to have optical transmission between the phone and the computer, or within the smart enclave itself and the computer, and actually permit transactions to occur cross-chain through that mechanism. So your interface is still what we call a wallet. It's not really a wallet in the traditional sense of wallet, but it's the term that the industry at large has used. So why, there's an extent to which you look at these things and you say, I don't really need to push every single rock uphill. If people want to call it a wallet, then call it a wallet. But it is essentially the operating center from which a person interacts with a blockchain application, platform, or product.
All right. And you've also mentioned today your own cryptocurrency, Gajus. What's special about it in terms of the utility?
So a couple of layers. Gajus are the currency of the Gajumaru. They are minted by Groot. Now, what is Groot? Groot is actually a development of Bitcoin NG. Bitcoin NG was a white paper written in 2017 by the computer science professors at Cornell University who had a thought. If Satoshi knew what they knew about distributed computing and what had been learned in the years since, how might they instead have coded the Bitcoin system? So Bitcoin NG was a massive step change in efficiency. We took Bitcoin NG and added a great deal more efficacy to it. So, for example, our system works on the cuckoo cycle. Um, that means that you can mine it from relatively basic computing systems. Um, Relative to the Bitcoin mining process, it's thousands of times more efficient. But that then leans into meaning that transactions within this context become extremely quick, very low latency. The latency on a transaction for us is 3 seconds. The latency for a transaction to even make it into the ledger, not to be settled, but just to make it into the ledger at all on Bitcoin is 10 minutes.
Hmm.
So Gajus are basically Bitcoin made tens of thousands of times more efficient.
Hmm.
That's it.
And who?
Exactly the same idea that they have to be mined. They can't just be magicked into creation by clicking our heels together 3 times a la Dorothy. They actually have to be mined. The utilization is a different thing. So one of the things that we're really aware of is the fear that people won't use it as a currency. So, I spoke earlier about on the demo, we talk about the lady selling goat soap for 22.95 and sending it to Australia for 10 gajus. That's a very deliberate step. We're showing that we think that the value should be around about $1, 1 Swiss franc. And we really want to keep it there. We understand that it will rise in value, probably quite substantially over time. But this isn't necessarily a good thing if people start to hodl. So what we want to try and do is try and keep the price movement within a usable range. So you don't go into a shop tomorrow, and because we have a thing called Gajumaru that you can implement, putting it into a phone to phone to laptop, phone to iPad, whatever you want, in a coffee shop, for example. But you don't want to go in today and buy a coffee for 4 gajus and then tomorrow have to go in and pay 2. If you're on the side of the receiving, you're like, oh, I'm taking a currency risk now. And you are. That doesn't help anybody. So the whole idea of building a marketplace out of the gate, of building Gajumaru and making it possible for people to do transactions in existing stores without changing the hardware, all of these things are about trying to drive utilization. Because the more utilization you have, the less volatility you have in the price. Now, you're still going to see an upward channel, but it's not going to be moving up and down like this and thereby making somebody rich, poor, rich, poor, rich, poor. Every direction you go, when you have that kind of volatility, somebody is losing. And ultimately, the ecosystem is losing because people then become, as you see with Bitcoin, hodl. And that's not what you do with the currency. You use it. So we're trying to build as many platforms as we can, at least to an MVP state, that allow people to actually use Gajus. We would love to see people doing more of that around us as well. Like I say, it's not something we can stop someone from doing. They can do anything they want. The other aspect to it is we're trying to get 10 million people into mine. We have a development pathway between where we are now and complete public release, at which point it becomes open to public miners. The reason you don't do that immediately that you've built the chain is if you're still trying to ship updates to the core chain, you're basically forking the chain all the time. If you go public, you end up having to manage thousands of miners all around the world, probably a lot more, and get them all to update their system all the time. Otherwise, you end up with hundreds of forks, thousands of forks, and it just becomes a mess. Or like Bitcoin, it becomes static. So what we've set our heads upon doing, and hearts and head, is how could we get millions of people in? Not because the other thing we have to be wary of is, so governance and minting are two slightly different things. With Bitcoin, there is no governance that comes with the how many Bitcoins you own. It doesn't confer any governance value. The threat with Bitcoin is actually that we're going to see such a concentration of mining that you can have collusive control of the mining. And that's what Larry Fink is talking about when he says that he thinks that Bitcoin can be changed. It can be if he and his ilk get to the point that they have a sufficiency of mining power that they can do a 51% attack on the chain. And we're not that far away from that. There are 2 actors who do more than 50% of all the transactions on Bitcoin now. Over 90% are done by 5 accounts. So governance is a different thing from that, but you can eventually fork the chain. What we also wanted to make sure is that when we get to public access, it doesn't immediately become dominated by those exact same actors. If we can build mining pools with, do you remember the SETI program years ago, where people could download, probably you're a bit too young, but maybe your dad or mum did it. You could download a piece of software and put it on your computer, and when you weren't using your computer, it helped do computations for the SETI program. Millions of people around the world did it. My father did it on I think it was a 286 computer. We're going back a long way now. And it was trying to create a global supercomputer through networking all of these. This is what we talk about when we talk about DePIN, decentralized physical infrastructure. And actually one of the patents, and we're licensing all of our patents into the chain for free as part of the process of what we're doing. One of the patents we have is actually around sharding decentralized infrastructure. So you can do these kind of things. But if we can get to a point where we have 10 million or more people providing their machines to the network, that is a real supercomputer. And if we can get a few hundred different pools running, those pools can then transition to, when we go into public mining, to self-organizing, to organizing under other mining leaders, to being individuals if they want. It all blows up and becomes open once it goes public. But the reality is we have given the Gajumaru the best possible chance of being as decentralized as possible for the long term through that process.
And if an investor is looking at, let's say, Ethereum, Solana, and Gajumaru, what's the single biggest reason they should bet on you instead?
Do you want to use something that works, or are you happy playing with fake blockchains?
Mm,
It's as simple as that. Do you want something that actually works, or do you want to play games within a fake context?
mm,
Because if you want to play games in a fake context and you want to talk about, magical unicorns in Web3, knock yourself out. Solana would love to have your business. Are we saying no to people doing that on the Gajumaru? No, because we have no power to say no to them doing that on the Gajumaru. But I would really like people who are doing real things in a grown-up way to think differently. And I think if they're looking at those two choices or those three choices, Solana, Ethereum, Gajumaru, it's do you want a punch in the mouth, punch in the face, or do you want something that works? That's how stark I think the contrast is.
mm. And you also say that Gajumaru is censorship resistant. But
Mhm.
realistically, if the major government wanted to shut it down, how would you stop them?
How would they do it? You see, in order for them to do it, there has to be governance. I have to have some control. One of my teammates has got to have some control. We have no control. Deliberately, we have none. This is exactly the same. So when I say that the Gajumaru is Bitcoin made tens of thousands of times more efficient with native smart contracts and native virtual machines, that's exactly what I mean. People think that it's a marketing line to say an actual blockchain that actually works, minting real money that really works. And maybe there is an aspect to that. But the thing is, I can point at every one of, and all of those words are operative. And I can point at why every single one of them is true. That's the difference. So to do that, you have to have no governance whatsoever, no control. So the government wants to shut down Groot, knock yourself out. You're going to have to go and tell however many millions of people around the world who are mining it that they're not allowed to mine it. Now, China did this with the Great Wall of China type approach, but it didn't really work, did it? I mean, EOS is basically a Chinese blockchain. The fight that you see going on within Bitcoin right now is whether China or America is going to win control of the 51% attack vector. The two companies that dominate mining in Bitcoin, one's Chinese, one's American. So much for the Great Wall of China, right?
Hmm. Then,
Reality.
yeah.
You cannot stop a movement. And this is what this needs to be. As I tell people, we've built the tools to allow people to create a human economy that works for all of us, that's open to all. Now we need a movement to have people actually want to get their control back, to restore their freedom. I mean, if you don't have economic sovereignty, you have no sovereignty at all. Your vote is meaningless. Americans talk about their Second Amendment. Great. Do you know how far you'll get with no money? Nowhere. If you can't afford to buy and sell something, they've closed off your access to cash. They've closed off your access to money. What have you got left? Answer: gajus. Therefore, you cannot be controlled. This is about, the whole the whole democratic settlement is that we appoint a government to do things for us on our behalf that we vote for. We vote for certain groups who advocate specific policies that we agree with. And there's supposed to be some accountability and so on within that. We've taken so much of that away by putting things outside of the democratic process and into the hands of the state, the super powerful state, the international state, the World Economic Forum, the World Bank. And we talk about, oh, we're now bound by international law. No, you're not. Either you're sovereign or you're not. Either your electorate are sovereign or they're not. But if you don't have the ability, if the people fear the government, you are not living in a democracy. You are living in a dictatorship. It might have a pretense of democracy, but it's a dictatorship. The UK right now is a dictatorship. There is no opposition to Labour, to the hard left, and it's socialism. And I hate to break it to people, but the Nazis weren't right wing; they were left wing. They were nationalist, socialist, German worker party. So when you see all these so-called hard right parties emerging, they're not right at all. There's no capitalism. There's no ideas of liberty or libertarianism within anything that they're saying. They are nationalist socialists. A lot of the drive that you see around things right now is this Mussolini-esque type idea of the state and creating this all-powerful state that is benevolent. It's not. Ultimately, the democratic settlement that we arrived at, the whole basis of what America was about, no taxation without representation, it wasn't a war of independence. It was a civil war between Englishmen. One lot who wanted to adhere to the feudalist system and the other lot who wanted to adhere to a capitalist libertarian system. These guys won. And look at the American economy today versus the British economy. They won bigly, as Mr. Trump would say. You cannot get back to a state where the government asks for permission and seeks the approval of an electorate if it controls that electorate's access to money, to assets, to viability. You can have all the guns and bullets you like, but if you can't feed yourself and turn on the electricity, power your home, heat your home, you're going to be brought to your knees pretty damn quickly. And the Canadian trucker case proved that. If people aren't aware of these things, they've become more and more aware of them. The fact that the US dollar is not a global resource has been made clear for decades. When Switzerland, in this century, Switzerland and Liechtenstein were threatened with de-dollarization unless they changed their banking privacy laws. Iran has been shut out of the banking system for a long time. It got permitted back in under controls, but then it's got shut back out again. Russia invading Ukraine, whatever the view of that from a political perspective, the reality is America de-dollarized the Russian economy. This is a weapon of mass economic destruction, wielded by one government, by one power. Trump is on record saying he wants to have the dollar be supreme. He's saying that there will never be a BRICS economy. Now, the reality is there can never be a BRICS currency because actually, as the euro proves, you've got completely disparate systems, disparate cultures, different ideas of what the relationship between the elected and the electorate is. And without you can't have a fiat currency without having political will, a unified political will behind it. The euro has proved that. It's a complete false currency. Doing one for the BRICS is even worse. But the Gaju, that's different. The Gaju is genuinely something that can be a global currency. It can be, and we really want to see it encouraged as such, because doing that means that largely we do have a human economy that's open to everybody, that everybody can participate in. People talk about the issues of mass migration, mass immigration, uncontrolled immigration, and so on. Well, why do you think people are desperate enough to get in a boat and go from North Africa to Europe? Answer: because they don't see that they have opportunity where they are. All of the things that we see around us, I think you can reduce so many problems down to giving people equitable access to finance, equitable access to markets. That's exactly what the Gajumaru provides. It provides an open resource that everybody can use, that nobody controls. And the more people we can get on board with this, the faster we get to the point that we actually have a global movement that is about restoring our economic sovereignty and restoring agency to the individual and the communities in which we live.
All right, then more people. And how do you get people to actually use Gajumaru instead of sticking with the chains they already know?
Hopefully by communicating earnestly and honestly. We've been doing long form videos to discuss the realities of certain things. Unfortunately, we're hopelessly nerdy, so we probably don't appeal very well to a wider audience. But we're trying to. We're trying to figure out ways of communicating better. The whole thing with opening up the pooled mining operations and providing memberships for people to come in and do that. hopefully, I was on stage saying that for every 100 francs we get in, we're probably going to spend 60 on getting more people on board, getting more advertising, more marketing, more and better educational materials. No, not just talking to the blockchain community, but to all the people who aren't in the blockchain world, and making the issues that we talk about real for them. Um, there's a hell of a lot to do. And bluntly, we're competing. When we look at what's been invested into the blockchain world, you're talking about $95 billion that's been spent on innovative marketing, almost nothing on actual innovation. That's a big, big fight to have. People talk about the fight with the existing system. That's nothing compared to trying to overcome the noise that the blockchain system creates. And in truth, look, we don't use words like revolution in the team. We talk about evolution. I've never, ever, in the 24 years I've been doing this, turned around and said, there will be no banks. That's rubbish. Back to what I said at the start of the conversation. So many of the big incumbent operators, the giants in our current economy, will actually make more money with less risk doing things that focus on their USP than they do now. And they'll do it in a much, much bigger economy. The idea we've been sold for the last 10, 15 years is that the economy won't keep getting bigger. It won't keep getting bigger because of all the restrictions being put upon it, that it's a fragmented, fractured global economy, and the people who control access to and between those fragments are the ones who make all the profit. And it's very limiting. So we've been given this narrative that actually the idea of continual growth is wrong. And you know what? You should expect less. Well, you should expect less because they printed so much money that your life has literally been devalued by this process. But that's not true. If you actually create a properly open economy in which we can all participate fairly and transparently, then you can have an economy that's unimaginably bigger than the one we have. Take all the strictures and restraints off our ability to engage in an economic context openly and fairly, and the economy is going to be so much bigger. And the likes of Visa, the existing banking players, they need to focus on their USP. If they do that in the context of an open global economy that is growing massively, they will make more money for less risk than they do today. And that's the message I would say to them. It's, if we have an adversary in this whole story, it's the people trying to push the crypto narrative and not the blockchain cryptocurrency narrative. The ones who believed in the origins of Bitcoin, they're the people who I think we really need to reach out to, because like us, they saw Bitcoin as this multi-millennial opportunity to change this track that we've been on. And hopefully they're the ones who can look at what we've done and say, yes, that's something that we should all get on board with and work with. So ultimately, we're trying to do this as almost a grassroots movement. We don't have the billions or millions of dollars to throw at marketing. We'd like to get there one day, but we're not going to get there by selling out to Silicon Valley venture capitalists. We're going to do that by taking the revenue we get from selling the software and mining services pools, because we'll have to run all the stuff in the background. Take a big chunk of that, probably about 60% of it, and spend that on trying to build out the voice. But right now, we need to build resonance. And by that, what I mean is we need to find some people who have a voice, who can work with us and build that resonance, much like when you look at a speaker, a big stack speaker, it actually has a lot of space within it to create resonance, to create depth to the sound. And that's what we need now. So we need people to come and work with us, get on board with us. We have the pioneers, as we call them, coming in now. And, we always say that capitalism is not I win, you lose. That's corporatism. Capitalism is I win, you win, we win. So we're living by that motto. And we're trying to ask people to come on board and join us in creating a winning economy for everybody.
Let me ask you the final on this. Like to summarize, you spent years building blockchain technology. For now, what's your end game then? What's the legacy you want to leave in this space?
So I started this in part because of my grandfather. My grandfather was account number 2 in the credit union movement in Ireland. The account number 1 was the local parish priest. And the credit union movement in Ireland actually did more for the rural Irish population than ever joining the EU did. Uh, Prior to that, if you didn't live within the Pale, which is the catchment area of Dublin, you didn't exist from an economic perspective. And this was about local people lending to local people because they had domain knowledge of one another. That whole thing about the community being so important. And that, I hope, is the legacy that we as a team can deliver. We can give the world something that allows everybody to make a choice. Up to now, nobody's really had a choice but to exist within the existing economic and financial system. We're giving people the tools to make a real choice, and we want them to try. I mean, at the end of the day, can we get people to understand that they are in a state of subjugation and dependency? Maybe, maybe not. I think people are becoming more and more aware of that around us. You know, your generation and the generations who are younger than you, they definitely have an apprehension that their futures are not going to be as good, or the aspiration they may have for their future is not as good as their parents were at the same age. Um, I think that generation know what we're saying, and they want to hear the message we have, and they will take that alternative if it's given to them. So I hope the legacy is that we can take what Satoshi pointed the way to and deliver something that will actually work and will be, as we say, a little bit jokingly and tongue in cheek, because the seminal book for modern monetary theorists is Daniel Graeber's Debt: The Story of Money for 5,000 Years, which is the antithesis of what we've been saying, that it's not about a debt instrument, it's a different thing. We described the Gaju as the interplanetary, because we're moving to an interplanetary state with all that Elon Musk is doing, the interplanetary peer-to-peer electronic cash system for the next 5,000 years. That's what Groot, at the very minimum, makes possible. And that's what I hope is the legacy that 24 years of pain, sacrifice, and a great deal of hard yards delivers. I've lost a lot of contact with my family because they had to move back to Ireland. I stayed in Switzerland because there's no way to rebuild from Ireland. I would like my children one day to understand why I sacrificed as much as I did. When somebody made a threat that if I carried on with what I was going to do, I'd be killed, my wife wanted to know why I would keep going. And I said, because ultimately, I pointed out to her that hundreds of thousands of men left their families to go and fight in the First and Second World War for nothing all that important. It was national sovereignty. My team, we're going to war in order to restore humanity's sovereignty. Can there be anything greater than that to fight for? I don't think there is. So we as a group, I personally have sacrificed everything to be here. We haven't taken the easy road once on anything. We've done everything the way it needed to be done in order to achieve our real purpose, which is to create a global open economy that is owned by nobody, but that everyone can participate in. So that's what I hope this is all. If that isn't what we deliver, then the pain, sacrifice, and loss to us as individuals and to the families around us that have suffered while we have pursued this goal, it will be quite a tragedy.
I still have a short part for you, the final one. That's the blitz. I'll ask you questions quickly and you answer as you wish. Ready?
Sure.
Ethereum, innovation or degradation?
Current state or start?
Current.
Degradation.
What's the biggest mistake most Web3 startups are making today?
They're not actually solving any real problem. They're just trying to find a way of making quick and easy money.
DAOs, revolution or group chats with tokens?
Done well, the future of economic coherence. Done as they are, another means of fleecing people out of money.
Real world assets tokenization, BS or future?
As it's being done, complete BS, because tokens point at assets, which means you still have to have a custodian. As we're going to do it and implement it into the Gajumaru in phase 2, which is from the middle of this year to the end of development next year, real. It
Bitcoin.
will mean that every single asset can be completely on-chain.
Bitcoin, gold 2.0 or hyped up scam?
Intent, Bitcoin was to be at a step change in how we create real money. So to that extent, gold 2.0 in a way, but it has become overtaken by people whose purposes and intents are to turn it into a glorified pump and dump scheme.
Most underrated Web3 project?
Gajumaru.
And final. And final, if you met Trump, what would you tell him?
Please don't do anything stupid with Coinbase, Binance, Ripple. Please listen to what blockchain is really about. Understand the potential that we can unlock here. Understand that this is about restoring hope to generations that we have destroyed the economic prospects for through egregious money printing. Understand that we need to step away from the existing system that is fractured and fragmented and allows a small select group to make outsized profits from controlling access to and from those fragments. And then they get to socialize their risk when they get greedy. We have to stop this. We have to restore agency to the individual. We have to give people back hope. Take leadership in doing that. Stop being friends with Jeff Bezos. He profiteered from hundreds of thousands of small businesses being destroyed by COVID lockdown. He is not a friend to capitalists. He is a corporatist par excellence. Stay away from him.
All right, Greg, thank you a lot. To our viewers, what do you think of blockchain? Is it still revolutionary or is it becoming another tool of control? Tell us in the comments. We'll see you next time on VSport Perspectives. Stay secure.